April 6th, or this is for April 5th, 2024. We got a measure move up from 15 to 18, and that's about where the high of the day was. Whenever you get a spike of bull or bear bars, there's about a 60% chance that once you get a consecutive pair of bars, that you're going to get a measure move from the high, in this case, the high of the last bar of the spike. So once you get 16, 17, 60% chance you're going to get a measured move up from 15, 16, 17, and then you get 18, and still 60% chance you're going to get a measured move up from 15, 16, 17, 18. And you can see this play out pretty much on, and you would have had to sit through some pretty tough pullbacks, but you pretty much could have bought the high of any, pair of bull bars on this spike, and you would have made a profit. And you could have sold the low of 45, sit through a pullback, and you would have made a profit. And the only one you wouldn't have made a profit on is this one. Whatever, if you had sold down here, you didn't get stopped out. You got out with a small loss, but you made enough money on the other ones that it doesn't really matter. And on a day like today, it's probably maybe it's more like 65% that you're going to get these measured moves because it's a trendier day. And on days where there's more trading range price action, maybe it's only like 55%. You can see here, even if you sold the low tick of here, I wouldn't do, for the record, I didn't take, I didn't buy this high or this high. But it's just, it's proving a point, I think, that, you don't have to take the trade, but you see 3, 4, 5, you're probably going to get a pullback. So you wait for the pullback and look for another entry. And you think, okay, well, we're probably going higher and we might get all the way up here. So you got to be thinking of these as possible profit targets, essentially. And you see these three, and then you get 23, 24. You think, okay, well, I can buy one of these pullback bars and, go for a really big profit, potentially, something like that. And, you don't have to, again, you're probably not going to stay in the whole trade. I would probably get out in here, but, it just goes to show that you can, it's a reasonable thing. It's a reasonable strategy to do something like that. My one thought coming into the day was that we would probably get at least 2 hours of sideways to up trading. After a big bear trend day like this, 75% chance you're going to get 2 hours of sideways to up trading, 50% chance you get some follow through selling on the open, and only a 25% chance of a big bear follow through day. So I thought most likely we were going to get some sort of sideways trading for a couple hours, but I also thought that the sell-off down was strong enough that we would probably get some sort of swing down at some point today. It ended up being a midday reversal, and it wasn't all that strong. You can see it just, we got a couple bars down and then started to go sideways, and we oscillated right around the 50% pullback of the bear spike for pretty much the remainder of the day. Bar one, bull bar with a tail on the top and the bottom of one, so not really that great to do anything. I would rather be just be flat. A low one short on bar two. It's a possible pullback to the moving average, the first one in a while. Bears might take the sell, but I think low probability. Probably buyers below. This is really overdone, and we're probably going to get a rally. Keep in mind, the tops of channels are magnets, and the top of the channel is all the way up here, so it's possible, that we get all the way up here. 3, big outside up bar. It's double bottom with 1, maybe 40% chance this is the low of the day. Maybe more like 30, 35. Probably not quite 40, but 30, 35% chance that we've seen the low of the day at this point. And kind of doji follow through bar on 4, not as good as it could be. Big bull bar closing near its high on 5, but this looks to me like a trading range, and it's forming the top of the trading range. After all of this selling, I don't think we're just going to rally straight up. I think there's going to be a lot of pullbacks and more of a grind upwards rather than just rallying straight up. So it seemed unlikely. You can buy the close of 5, but it's probably okay to even buy the close of 5 and exit below 6. But you could buy it with going for the measured move, but you are probably going to have to sit through a pullback here the vast majority of the time. Disappointment bar 6. It's a possible wedge. Here, some sort of parabolic wedge, and follow up some sort of bull trap. So some bears might take the sell below 6. Follow through on 7, not really all that ideal. And then you get an outside down bar on 8. So bad high 1 on 7 for the bulls. There were sellers above. You can see the bulls who bought this close, they potentially scaled in lower, and they're getting out during 5, or at the 5 close during 8. We didn't quite touch the 50% pullback during 7, but see, that's what they were doing. Outside down 8, but this is kind of disappointing for the Bears. I think the Bears wanted a stronger close somewhere to convince me that we were going to go all the way down here. Instead, they didn't get it. So I think this is a relatively disappointing close for the Bears, and we're probably going to keep going more sideways. You can see bears are disappointed in this close and they buy back shorts, causing the rally on 9. This is just sideways, and at this point, I'm waiting for some sort of strong reversal down or a strong reversal up. 10, a bear bar closing near its low. It's a double top 6 and potentially a wedge, truncated wedge 1, 6, 9, but I wouldn't sell 10. I think you're selling right in the middle of a tight trading range, and you're selling pretty much on support on the moving average. So really not all that great to be selling 10. I would rather wait to see if we get a strong breakout. Disappointing bar in 11, but I have a lot of the same problems with 11 as I did with 10. I have a slight bullish bias right now because I thought a couple hours sideways to up and 3, 4, 5 was relatively strong. So I think okay to buy, or not okay to buy above 10, or 11, sorry, but better to buy above 11 than it was to sell below 10. And then you get never triggers and you get disappointment on 12. A bear bar closing, around its midpoint. It was trying to flip the always in. 3, 4, 5, we were always in long, and we never quite went always in short. So 12 was trying to flip the always into short, but you can see we ended up getting a disappointing close. It doesn't happen. 13, a bull bar closing kind of near its high, but not quite on its high. I think if 13 closes on its high, it's a good buy, looking for follow through. It's a big enough bar that it's potentially a bull surprise, and you might have trapped some bears who were trying to sell during 12, but they ended up getting disappointed. So it's probably the bull's turn to get an attempt here. Plus, it's potentially a wedge pullback. 6 through 8, 10, and 12 are all pushes down, and they all failed. 14, bear doji bar, but just looks like a tight trading range to me. I wouldn't do anything here. If you're long, it's okay. It's probably okay to be long because and that means we're probably still always in long through this trading range. So a slight bullish bias here, in my opinion. 15 inside bar. Am I buying above 15? I probably wouldn't. It's not quite closing near its high. And then you get a bull surprise 16. Can you buy 16? You can, but I think it's difficult to do. It's a very climactic looking bar. So you probably can buy it. You know that this is a magnet this low since bulls bought this low and got trapped. And it's starting to look like this whole thing is going to form a big trading range. So we might have to get back to this low. But I think it's really difficult to be buying this close, but it's still a logical thing to do and it's reasonable. Follow through 17, still okay. Buy the close, buy the market, but this is still very climactic. If you're doing this, you have to have a stop all the way down here, and that's a lot of risk. So a lot of traders don't want to do that. 18, more follow through for the bulls, but again, extremely climactic. I said to myself, I saw a 17 close, and I said, this can go without me. Basically, it was my thought process here. It can go, I thought we might get vacuumed right up to the magnet. I thought it was possible. But if we got a pullback, I thought it was better to look to buy a pullback and then look to go for the magnet. 19, a bear bar closing near its low. Potentially some sort of parabolic wedge, 1, 6, 19, but I think 15 through 18 was strong enough to reset the market cycle, so I don't think that argument's as valid as it could be. The question becomes, are we going to close the gap with the 6 high? And it might look like we did, but we touched the 6 high but did not go one tick past. And if you touch, if you've been trading for a while, I'm sure you've seen the market touch your limit order to exit and not fill it. And that's what happens 90% of the time. So if the market touches your limit order and doesn't go one tick past it, it's only going to fill that order about 10% of the time. So if it touches your limit order and you get filled, feel very lucky. And you can see, so disappointment, if you sold below 19, it's probably going to go sideways to down. We're probably not going straight down because of how strong 15 through 18 was. And, any sort of parabolic wedge is probably a minor reversal. So we probably have to go sideways before we do anything. Just kind of like over here, parabolic wedge, we had to go sideways. So if we're going to do anything here, I'd expect us to go sideways. It's a high 120, but not very good. I'm expecting 2 legs sideways to down. A low 1 short 21, but I'm not selling that. I think just better to wait. This is too strong, and we could find buyers pretty much anywhere here. Follow through 22 touches the high, and you can see it immediately finds buyers. I'm not buying above 22. It's a high 2. I'd rather wait for a bull bar to buy above, but we are still always in long, and the bears are still trapped. And those are both important things. So we're always in long, and you have some trapped bears. 23, a bull bar closing near its high. I think it's an okay swing buy, looking for some sort of measure move up. Definitely always in long. And we just got, the bulls have been buying the moving average. So pull back to the moving average, bulls are going to buy. I think totally fine to buy above 23. Follow through 24. The problem with buying above 24 is you're buying, well, first off, the problem with buying 23 is the channel is pretty tight, but still okay to do. Follow through 24, still okay to buy, but the problem is you're buying, the bulls who bought the 18 close, probably rather disappointed in this. They might be trying to sell. If you bought the 18 close, you probably knew something like this was likely. But still, they might be disappointed. They were hoping for a vacuum test. They didn't get it. Maybe they scaled in at this high, and they're looking to get out up here. And that's probably what was causing 25 is traders selling out a bit early. And that's why you get essentially a lower high double top 25. I wouldn't sell 25. I think that, the Bulls have been doing too much. So I think we need to go a little bit more sideways before we go down. But anyways, 26, a bull bar closing near its high. 26, a good buy. If you'll notice, the bears who sold the close of 25, maybe they didn't get filled during 26. Instead, we got a bull bar closing near its high. And you can see, bulls always in bulls would have exited below 25. So what do the algorithms do? I say it all the time. They buy the close of 25, trying not to let it trigger, and they're risking, 1 or 2 points, and they're just trying to just drive the market up essentially. And they might have done it. They might have done it here. They might have done it here. They might do it here. They might do it, 30 times today. I don't know, or maybe probably not 30, but they might do it 15 times today. And this might be the only one that they win. But if they're risking 2 or 3 ticks and they can make 20 points here, it doesn't really matter. They're making a bunch of money doing that. So, and some of them are scalps, right? But 26 was a credible buy for a swing. You are high in the trading range, or a potential trading range. All of these. This is what buy the close markets do. Whenever you see these kind of things, you always think it's about to reverse, and it just never does. And that's what a lot of bull trends do. They keep traders trapped out. Is it always looks like it's about to start to pull back. So you get a micro gap down on 27, and you're just kind of, I'm not sure I want to buy, but it's a bull bar closing near its high. It's always in long. Just buy. Follow through 27 again, climactic. You probably don't think you want to buy, but it's okay to buy. 27, disappointment 28. Look what they did again. They bought the close. So again, maybe that wasn't the only one they won. If they bought the close of 25, they probably also bought the close of 28. And again, risking a couple ticks. You can see there was a micro gap up on the open of 29. There was a micro gap up on the open of 29, and that's what essentially started the rally. Inside bar 29. Okay to buy above, and I think at this point you probably just pull your stop to here, or your stop was here, right? So if you bought anywhere in here, you're going to get out below 28 if it triggers, but it doesn't trigger, so you can just keep your stop here. And anytime you see something like that where it's like 25 but they bought the close, you can buy above 26. Probably just put a stop right here. If this is going to go up, it should just go. We shouldn't get any sort of bear reversal bar here. We should probably just get some sort of rally immediately, and that's exactly what we got. This maybe isn't the highest probability trade. I'm not sure the exact probability. Maybe it's something like 50-50 if I feel like I'm not sure, but it might be a little bit better for the Bulls, maybe more like 55%, but you're only risking 6-7 points and you can easily make 20 here. So good math. Okay to buy above 29, follow through 30, but a tail. Inside bar 31, still okay to be long. You can maybe exit a couple points below here, but I would just probably keep a stop and exit below bear bar closing near its low. Bull bar high 1, 32, but you're getting high in this range, and this is starting to become a channel rather than a buy the close rally. So it's probably going to end soon. Follow through 33, 34, 35. So it's a tight channel, but you can see we're starting to get dojis and bars with tails on both sides. So it's really not as good as it could be. Bear bar closing near its low 36. I would get out of longs below 36, but it's not a credible sell. This rally is way too strong to be selling. Bulls are going to exit below 36, and you can expect us to start to go sideways. So you probably expect 2 legs sideways to down, and that's what we got. But that's why this is a perfect example of why it's not credible to sell 36. Because if you're selling 36, your premise is 2 legs sideways to down, and that's what you got. But you couldn't really make any money doing it. If you sold 36, you maybe could have made, if you were just the world's best trader, you could have made 4 points. But really, really difficult to do. So bad follow through 37. It's a high 1, but I'm not buying. I think that probably a few legs sideways to down. Follow through or bull bar 38 closing near its high, but not really worth buying. I think a couple legs sideways to down. 39, a bear bar. It's a low 1 short, but this just looks like a second leg to me. And same thing with 40, disappointing. Or not super disappointing, but just a lot of overlap. Not really a surprise. Anything, if I was going to sell anywhere in here, I would need some sort of big surprise. I thought we were going to go more sideways. And then follow through 41 for the Bulls. It's a high 2 above 40, but really not all that great. Bear bar. Big bull bar 42, but a climactic looking bar at the top of what is probably some sort of trading range forming. This probably isn't going to be a small pullback bull trend day after this much of a bear trend day. So I thought probably going to be sideways soon. And I thought this sell-off was likely to get a second leg down, so I was kind of starting to look for a swing down at this point in the day. I thought we'd probably go more sideways first. I didn't think we were going to get it this quickly, but that changed when we got 43, 44, 45. This was a really strong surprise. I thought we were going to drift more sideways here. 43 was a credible sell, so it was a wedge, 6, 18, 36, and we tried to break out above the wedge, and we got a failed breakout above a wedge, 43. So failed breakout above a wedge, midday reversal, and you can see we had a triangle here. This all formed a triangle. Failed breakout above the triangle, tests back into the apex of it. The apex of a triangle is always a magnet because it's essentially a swing point. So those are always magnets. You can see we retest the apex of the triangle again on 49. So whenever you get a triangle, the apex of it is always going to be a magnet. And so triangles can also be final flags. As you can see, we got to break out above the, I don't know if I have a good example. This is triangles as final flags. These are pretty old, but triangle, final flag, breakout above. You can see failed. Yeah, I don't really know what I was doing here. A lot of these slides are older, and a lot of the stuff doesn't really make sense. But I just think making slides is, well, because Brad said it, it's a very good way to learn. Just make slides on anything. Look at. You can take any of my topics, pause the video, go just pick random things, just double tops, double bottoms, anything. Just make slides. But anyways, higher high, major trend reversal. When you get a higher high, major trend reversal, you're probably gonna have to get a lower high, which we did get, and failed breakout above a wedge, failed breakout above a tight trading range or above a triangle. So a good sell 43, follow through 44, 45, strong enough that I thought that we might start to get a swing down relatively soon. I still thought we would pull back, but I was generally expecting this to not be that strong. I thought it would be more sideways, and then we'd get a reversal. But if everyone's expecting it, sometimes it's stronger. So good follow through 44, 45, disappointment 46. So we're probably going to start to form that lower high, probably get 2 legs sideways to up. You can see 47, a bull bar, pause bar 48, and then second leg up 49. None of this is worth buying. I think we're going to get a lower high because 43 through 45 was strong enough to probably get a lower high. And then you get the lower high at 50. It's always in short from this. So okay to sell always in short. Bear bar closing near its low. You can sell 50. Doji bar 51, but still always in short. Follow through 52, 53. 4 straight bear bars. Bears start selling the close. You get more follow through 54, big tail on the bottom, and then climactic follow through 55. What's it testing? Well, it seems like this is where the bottom of the trading range was. You could see the 22 high traders sold above. It wasn't unreasonable to do, and they got trapped. You could argue they got out on 24, but that's really hard to do. And the vast majority of traders would not have been able to do that. So most of the algorithms are probably trapped. So this 22 high is going to be a magnet since it's possibly the start of the trading range. And you can see that's pretty much, we went a little bit past it. We probably went all the way towards the close of 22, but the 22 high is a magnet, and that's what 55 tested. Traders bought back shorts. A lot of traders who were holding, they thought, well, maybe I'll get lucky and it'll break out to the downside and keep going down. But instead, we get disappointment. And when they see 55, they immediately buy back shorts at the market, and that causes 56. If you're short for any reason, you see 55, you can just probably get out above 55 and look to sell again below a bear bar after a few legs sideways to up. Big bull bar 56, disappointment 57, inside bar 58, touching the 55 or the 56 close, and then outside down 59. Do you sell 59? I think hard to sell 59 because it's such a big bar and big risk, and the downside's probably limited, but it's probably not the worst thing to sell. Follow through 60, but it's just such a big tail, a lot of just overlap, so more of a trading range bar. And it does test the 49 low, so bulls bought below the 49 low. They were able to scale in and get out, so just more reasons it's trading range. Again, buyers here, more reasons to trading range. So you're expecting a trading range. Follow through on 60, but not that great. Inside bar 61, high 2, I'd rather not. Really the last credible thing to do, I think, was buy above 66. It's some sort of truncated wedge, 1, 2, 3. But I don't think it's all that great. I think, in its double bottom with 54. I don't really think it's all that great. I think it's probably a minor reversal. This is strong. This is decently strong. So I think this still has more influence over the market than the bull move here. We might have to get a rally up somewhere in here, but this is probably a minor reversal on 66. You're probably not going to get what you want out of it. So it's okay to buy above, follow through 67, disappointment, outside down 68, bull bar closing near its high 69, but you get disappointing follow through. And, you can't really, it's hard. If you buy above 69, you probably have to have a stop down here. and then you get this. A lot of traders exit, and this is what trading ranges do. If you bought above 69 with a bad stop below 69, you're going to get stopped out. And trading ranges run bad stops constantly. I'm trying to look for another example, but those are skunk stops, and trading ranges constantly run skunk stops. So you have to be really wary of those. I can't quite find another example right now, but I'm sure there's a million of them in here. Maybe buying above here with a stop below rather than a stop below here, because you should be getting out here, but instead you probably get stopped out. Credible stop orders today. It's probably buy the close 5, but hard to do. You're probably going to have to get out pretty soon. I thought 6 was a credible sell, but you have to get out somewhere in here. You probably can't just sit through this and get stopped out. You got to get out rather quickly. I think you don't have to get out after 7, but I think 8 is your sign that you need to get out. Buy the close, buy the close, buy the close. I probably wouldn't sell 19. It's a minor reversal. Reasonable swing buy 23, 24. Buy the close, buy the close, buy the close. I'd get out and just be flat. I wouldn't buy this. It's too climactic, and wedge midday reversal. We've been over that. You can sell this, sell the close, sell the close, sell the close, sell the close. And then you could probably sell 59 and you could probably buy 66. 66 is probably better than 59, but I would probably just be flat at that point. On the daily chart, pretty good bull bar, trying to get a wedge 1, 2, 3, but I don't think, we'll probably trade above it, and we're probably going to test. Keep in mind, this sell climax high is going to be a magnet, but I'm not sure how much higher we're really going to go. On the weekly chart, we got, let's see if this closed below its midpoint. Did. So good for the bears that this closed below its midpoint. I'm not sure how much we're going to pull back. We're probably going to get to the moving average, but we can do it by going sideways or down. So I think probably rather sideways. I'll be interested to see if bears can get consecutive bear bars closing below their midpoints next week. So pay attention to that. But overall, I think we've started a trading range, and we're going to be pretty sideways here for 20 to 30 bars, and then probably continue to rally, since this rally was pretty strong. The same thing I'm talking about on the 5-minute chart here, where we got this, and you're probably going to have to sit through a pullback, but we're probably going to continue up, is the same concept for buy the close up here. You're probably going to sit through a pullback, and it could be a pretty unpleasant pullback, but we're probably going to continue up. So I'm interested to see, if we get back to this high. I think it's pretty far, but we can definitely do it. So yeah, that's today.